When we think of FAANG stocks, we think of the traditional big growth high-tech companies, right? We got Facebook, Amazon, Apple, Netflix, and Google. Those are the FAANG stocks. But I came across an interesting article from Merrill that talked about FAANG 2.0, and they were really talking about, you know, getting away from specific stocks, and FAANG 2.0 is looking at particular market industries and sectors and things to rotate to that might be the areas for the next level of growth to come. So we're going to talk about FAANG 2.0 and a little bit more coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. That sounds interesting to you? Hey, do consider subscribing. Okay, FAANG 2.0. It was an interesting little concept, and it was from this article I read from Merrill. You might know him as Merrill Lynch. And they're changing kind of their portfolio tilt is what they call. And their version of FAANG 2.0 is that it reflects, I'll read this to you, reflects a new world of geopolitical risks and resource hard asset intensity. So within these areas of the market that we find future value given the defining market rotations we expect. So it's really about not looking at FAANG 1.0 of individual tech stocks and more like what specific industries and sectors might be good. And we're going to look at those now in FAANG 2.0. And you can ask yourself, are they just making this up to be kind of clickbaity, by the way, from Merrill? So let's take a look at that and see what you think about FAANG 2.0. Well, the first one, of course, is the letter F. And from Merrill, they were talking about fuels, right? The energy sector. And one thing they mentioned was that the energy sector still accounts for only 3.7% of the S&P 500 market cap, the 500 largest USA stocks. And well below the 13% weighting it had in 1990. So energy stocks used to be this big thing, and now less so. So does that mean they're rotating into that? More opportunity for that, especially with like geopolitical tensions and things around fuels and oil. So the first one would be, like fuel or the energy sector. You can see instead of saying energy, they did F for fuel to try to make it sound like FAANG 2.0, as you'll see going through here. The next one was aerospace. And I'm thinking like space exploration, Virgin Galactic, stuff like that, but they're really talking about defense contractors, right? So, looking at, again, those geopolitical, tensions. All right, at this point, you might be thinking, gosh, I like, environmental, social, government type investing, ESG investing. I don't want to invest in energy stocks and defense contractors, no matter how much they're trying to make it sound like FAANG 2.0. Well, here's one that's a little better for you, which is A for agriculture. And that that we need to produce food and more food. In the next 4 decades, we need to produce more food than the last 8,000 years. So there might be opportunity in agriculture-related stocks and things like wheat exports. Russia accounts for 20% and Ukraine 10% of wheat exports. So there might be opportunities in there if you're looking at the right companies around agriculture. All right, what's our N? What's our letter N? Nuclear and renewables. Okay, we're back to folks like, oh my gosh, I don't want to invest in nuclear companies. But then again, maybe you do. And that's also where they threw in renewables, right? Renewable energy, we know as a trend is a growing trend. And it certainly increased during the pandemic. Even though there were declines in other fuels, all of 2020 during the pandemic, right? Think about it. People were not driving cars. People were, we were on lockdown, right? Now we're seeing that surging back coming up, by the way, and more energy use. But with inflation impacting energy use and our ability to have disposable income to spend on things, that can be impactful too. So, but they're looking at FAANG, nuclear and renewables. And then the G, gold and minerals. And, gold has always been kind of a good hedge against the stock market when it's going down. People invest in gold, as a, when the stock market decreases dramatically, gold will increase. But they also threw in minerals. And I think this was an interesting play because you think about electric vehicles, there's a lot, there's more electric vehicle or EV manufacturers all the time. It's not just Tesla, right? And so, but they all need, they need batteries, which is mineral intensive, right? A typical, from the article, which I have linked in the description below, by the way, a typical EV requires 6 times the mineral inputs of a conventional core, according to the International Energy Association. So that's interesting. So if you want to play in the electric vehicle space and not sure, want to put all your money into particular electric vehicle companies like Tesla or NIO, or even traditional companies like GM and Ford who are getting into electric vehicles, you can kind of do this mineral play. All right, so here you have FAANG 2.0 fuels, aerospace, agriculture, nuclear, renewables, and gold and minerals. Again, the whole article is in the link below, plus free courses and all sorts of good stuff in the description below, so do check that out. Put a comment too, like, what do you think of that? Is it kind of just goofy? They're just kind of making this up and say, FAANG is an acronym, so let's do this. Or do you think there might be one of these areas that seems interesting? You go and throw that in the comment. So with that, that wraps up FAANG 2.0. We'll see if it becomes a thing. Not so sure it will be, but if it does, you heard it here first maybe, right? All right, I wish you all the best in all your investing endeavors, and do check out again all the information in the description below.